Hey, what's up guys, Ali here. So today I'm going to be talking about how to short the stocks and when to short the stocks, and just a very simple basic strategy when you want to look to short the stocks. And if you guys don't know what shorting is basically you make money when the stock goes down by selling the stock first and buying it back later. Okay, and in this example I'm going to be talking about the stock NIO. Okay, so now what's going on is that the market is going down rapidly, right, in the last 2 weeks. And what happens is that if you notice here, let's look at the daily chart first. What you need to do is always, if you are looking to short or you're looking to buy the stock, you always want to look at the daily chart first. So notice here on the daily chart, which is this chart here at the bottom, notice here that NIO has been just downtrending and the overall market is downtrending, right? The fact that the market is downtrending, you always want to go with the trend. Okay, so the trend is downward. That's when you're gonna first figure out, okay, if you want to short the stock or long the stock. So here in this situation, we're going to be looking to short the stock. Now that we know, okay, the market is overtrending, then you go to the 1 minute chart. Okay, 1 minute chart, and then you look for entries. So notice here that what's going on here is that whenever the market is downtrending, what happens is that 99, not 99%, but like a very big amount of percent of time, maybe 80%, whatever, but big amount of percent of time, the stock goes up first. Okay, you see how it went up, and then everybody thinking, oh my god, market is going up. However, since the market has been downtrending for the last 2-3 weeks, what happens is that the stock eventually turns down on the downside. The psychology behind is that just imagine anybody who has bought NIO in the last 2 weeks has just been red. They're just losing money, right? Anybody who bought it, unfortunately, right? Unfortunately, I hate market going down as well. However, that's the reality. What's going on is that everybody who bought it, they're red. They're losing money on NIO, right? So when they wake up in the morning, they're stressed, right? So all the NIO holders or all the stock that has been going down, any stockholder that has been going down for a very long time, they're stressed. Okay, so what happens is that when the stock goes up, they wake up in the morning and they see, oh my god, finally the stock is coming back up. I may, I think it's gonna come back up now. But then what happens is that all the people who are holding, they start to sell. Okay, so when they wake up, the stock starts to go up. But eventually, people start selling because they're all bag holding the stock. They're all red. Or people who have very like shaky hands, they're not looking for a long term, they're looking for short term. What happens, they start to sell, and that causes this panic. And since everybody who's already been holding for a long time, they get scared, they start to sell as well. That causes this sell effect. Okay, and that is why when the market is downtrending, most likely the stock is going to come up and then go back down again. Okay, so that's the number one key you have to understand, that the market is overall downtrending. So now that you understand the market is overall downtrending, you need to look for a price point where you can enter. So then also at the same time you have a risk allocated, so that when you enter into a stock, you have good risk to reward ratio. Okay, and I teach you guys how to trade trend lines on the upside. However, all you do is just completely turn around the process. So what you do is you look for a trend break on the downside. So normally when the market is very bullish, we look for a trend break on the upside, right? And then when the trend breaks, we buy here, right? We buy here and then look for the stock to push up, or we make this trend. Okay, and then we buy at the break of trend, right? And then we look for a stock to push. However, notice here the trend on the upside is not going to work because the market is downtrending. So you need to look for a trend on the downside. So all you do is you reverse your process. So simply, look here. Now I'm gonna draw the trend on the downside. Notice here. You see how it tested on the downside, downside, and notice here. This was a great area to short. Okay, and then what happened after? Look, right? Amazing shorting opportunity. So this was a great short. Now let's say that you missed it. Okay, then you short here. Then there's another opportunity for a trend break on the downside here. Okay, let's say you missed it here. Then there's another opportunity of the trend on the downside here. Okay, right here. Okay, now every time you enter, okay, it's possible a stock could easily reverse. So when you're entering into a trade, you need to have a stop loss defined. You need to have risk. So what you do is you're entering it here because the trend breaks. So if the stock comes back up in the trend and breaks the next support level or the resistance level right here, so this is clearly a resistance level right here. So if you short here, if you short at this area, right here, and the stock comes back up here and here, so your stop loss is here. So you stop it out, get stopped out, you take a small loss because now the stock is cleanly reversed. However, since it's downtrending, it's most likely going to come down more and gonna keep going. But the idea of getting short at the trend break is that if it does go against you, you take a very small loss. But if it does work with you, you take a bigger profit. So I had a very small day today, but notice here all my losses are like very, very small, but my wins are bigger. And at the end of the day, you end up with a decent profit. Okay, so you have like bigger wins and smaller losses. Okay. And that's pretty much it. Now let me show you another. Let's look at Tesla just for example. Notice here, same thing happened, exactly same thing happened. The stock starts to go up and then people start to sell because they're all very, very red. Tesla has been just downtrending. Anybody who has bought Tesla recently is just down. I'm personally in my long-term portfolio, I have some shares, I'm down there too, but it's long-term, so I don't really care about that because I'm thinking overall Tesla will go up. Let's see what happens. But for the short-term time period, market is downtrending. Now look here, if you are shorted here, which is about $608, the stock came down $50 straight from the trend break. Okay, imagine if you just let's say if you had shorted 100 shares, obviously you could have made 5 grand in just one day. Now obviously you're not gonna hold 100 shares the whole way all down, you're gonna take profits, but you get the idea, right? That the opportunity is endless in the market. It's not that everybody's losing money. There are people making tons of money when the market is going down as well. Now again, I don't want the market to go down, but that's the reality. So you have to understand it's all about supply and demand. When people are stressed, they're gonna sell. When people are chilled, they're gonna buy or they're gonna hold more. Okay, and on the basis of that, you have to realize, you have to be able to change your strategies. All right, when something was working just 2 weeks ago when we were trending on the upside, it's not working anymore. So notice here, clearly, if we used to trade on the trend side, on the upside, Tesla used to break out and then go, and now it's not going anymore because the whole trend is downtrending. All right, guys. So I really want you to understand when to look for to short and when to look for a long. All right, guys. So take care. Hope you guys learned something. If you guys like it, make sure to subscribe and like the video. I'll see you guys later. Bye.